Good afternoon, MMTs. We're talking about that 1650 level on this S&P. It's a 60-minute chart. That's what this is. Not only is it a 60-minute chart, we're going to talk about September 3rd, where we called for the correction way up here. The price volatility in the S&P is going to increase. We started out today with a move to these. So today is September 3rd. It's this bracket. So let's take a look right here how the S&P was range bound mathematically, of course, MMT. What I would like to point out is that the correction is still underway. The S&P 500 has clearly demonstrated that the bull had come roaring back today. However, every time that we made the initial movements here, you can see here where we gapped up this morning, September 3rd, right here. So the low end of this gap was 1632. And so what I want to show is the low end of the gap. Let's make sure we got the right number. The low right here in this 60-minute bar at 9 o'clock a.m. Eastern Time was 1635.95. And we shot straight to the high 1651. We immediately had a reversal in the S&P. The broader S&P 500 stocks were selling into the rally and the downtrend, the reversal that we called on our site. This is an attempted bull rally to come back up here and test where the gap down was back on August 26th. And what happened here is that we had gapped down. We went down here and made those lows. We tested that major wall of support at 1630 on the S&P. And we clearly went up here to 1650. What we will be looking at is where this attempted September volatility, which was lower volume but still some volatility in here, is where that this is the beginning of the bottom of September from the August selling. Remember, we have sold down very nicely to our support levels. Our first target was 1630. They've been definitely fighting with it since August 26th. Once we got down there, just remember, we're shorting way over here. So that correction and this counter rally has a major wall of resistance. I will tell you, for the month of September, the price volatility in these exchanges are going to increase considerably. So we can see where the bull rally fails and the bear comes into play. Rally, so we tested right across here. We can still follow. If we can take out that 1650 area, we would look right up here at about 1662, or the half bar, which is 1661 right here. That was on 826. That's the upper resistance levels. They're going to have to take out this particular period of the S&P MMT. So once again, if we get over in here, we have a half bar at 1653 that was set on 822 back over here. And that's the shorter distance, the next major resistance level on a 60-minute chart on the S&P. However, at the top end, the reversal volatility where the bear comes in is going to increase in the month of September on the S&P 500. Major support level has not been broke at 1630, but we're going to take a look at what kind of index put options that we can trade within the failure of that bull move. He sold that and came down lower than the original opening bell gap right here, because that's what happened here. So we came right down in here, and each one of these lines are a quarter delta in the system. They are exactly $3.01 today, and you can see how accurate we are. So we had a 1, 2, 3, 4, 5, 1/4 delta range times $3. That's a little over $15 in the S&P off of the bottom and reversals. This is how a bottom sets up for a bull, but the bull has to continue to go higher within the reversal that happened in August. Okay, so 16 we're just going to take a look at this S&P right over here. This is after hours. That box doesn't need to be in there. Let's just focus on this. These are our resistance levels moving forward. Right in here, this area, and between the gap down that happened, we came up and we tested where that reversal started, and it went straight down. And then for the last part of the close, the S&P came back up to 1639. It's 9 handles above a major support level on a 60-minute in the MMT platform. Price volatility increases. There's a lot more volatility coming in the indexes.